Hello and welcome to Three Questions with. Got my buddy Steve Cohn with us. Steve is a mortgage officer. Steve, good morning and welcome to the show.
Hey, good morning, Kevin. Thanks for having me.
So, Steve, I guess I have some questions today that may not have answers to, be honest. But one of the things I've seen happen recently is people come to you to get qualified to buy a home. And while they're searching, rates have gone up. And in some cases, your dream house is now out of reach. Do you have any advice for them? What does someone do in that situation?
Yeah, I mean, you're right. It's not that there are no answers. There just are no satisfactory answers. No answers that anybody wants to hear. Yeah, I mean, what I would say is, keep in touch with your loan officer. Keep your pre-approval current. I mean, if you qualified a year ago, if you qualified for 500,000, hey, you may only qualify for 400,000 right now. It's tough. The there's a really common phrase that's being spoken frequently in the industry these days, in mortgages and in real estate, and that is marry the house, date the rate. Have you heard that?
Yes, many,
Yeah.
many times.
Yeah, exactly. And it very simply just means, yeah, it's a tough market right now. It's a tough time to buy because of mortgage rates. But if you can qualify, if you find a house that you love, get into it, knowing that the interest rate that you have right now, the mortgage payment that you have right now, is very likely going to be temporary. And in the next year or two, you should have a good opportunity to refinance to get that payment down. I kind of did some quick math before you and I got on here, and a $400,000 loan, the difference between a 7% interest rate and a 4.5% interest rate is over $600 a month.
Wow.
So, if you get into that house now at, with rates up near 7%, and a year or two from now, you can refinance back down into the mid fours, which is kind of what we're hoping. Yeah, you can knock your payment down $600 a month. But yeah, the issue is getting from here to there and truly qualifying. I would say you may also just need to kind of change your time horizon a little bit. Maybe you're not going to get that dream house right now. Maybe you're going to get the next stepping stone, get a house, maybe not quite as much as what you want, but knowing it's what you can get into right now, and you're still going to be able to build that asset between now and the time that you are able to move forward and get that dream house.
Steve, any chance you have any good news for buyers right now? Doesn't seem to be a lot of it out there, bud.
Yeah, I mean, there are some good things happening. The market has slowed down a little bit. It's not as crazy as it was, 6 months ago. You're not up against as many buyers. So if you find a house that you love and you want to put in an offer, maybe you're up against a couple of other offers, not 20 other offers. So we are seeing, prices start to moderate a little bit. Here in New Hampshire, at least, we're not expecting, home prices to plummet or anything like that, but we're definitely expecting to see them really moderate to a more normal appreciation level. Whereas in, 2021, home prices appreciated like in the 20% range. This year it's south of 10%. And then next year, maybe we're going to be looking at more in the more normal 5% range. So you might have some opportunities now that, a year ago, even though you qualified fine, maybe you qualified for a lot more of a house, you couldn't get it. You'd be putting in 10, 12 offers and not getting accepted because you were up against so many other offers. So one of the silver linings of these higher interest rates is that it has caused some buyers to kind of step back to the sidelines a little bit. There are still plenty of houses being sold. I've got plenty of pre-approved buyers that are actively looking. But there are some who have told me, hey, you know what, we're gonna hold off. We're gonna wait till spring, see if rates come down a little bit. And so that kind of gives a good net effect for those that stay in the market. Now they're not up against quite so many people. The other thing is that sellers are starting to realize they're not 100% in the driver's seat anymore. So we're starting to see seller concessions again, situations where, the buyer can ask the seller to cover some of their closing costs for them, or to make a concession here or there on something that, whereas a year ago, sellers were like, no, pound sand, you know,
Yep.
we're not agreeing to give you any money towards closing costs. We're not agreeing to even you doing home inspections, you know, we don't, because the next guy doesn't want a home inspection. So we're going to go with his offer.
Yep, absolutely.
Um,
and stuff. So
yeah.
Steve, can you reach in your desk drawer and get out your crystal ball for me? Because I want to know what's going to happen next year. Now, again, that's a joke. Obviously, no one has a crystal ball. But what, you know, what you're reading from your industry, what does it look like in 2023? Will rates come down, stay the same? What's predictions?
Yes.
Both. First of all.
No, you know, it depends who you ask. It really does. I think the general sense is, yeah, we are going to see rates come down a little bit. Mortgage rates are not, you know, contrary to what a lot of people think, mortgage rates are not directly tied to the Fed. So when you hear, oh, the Fed just raised rates 3/4, people
Right.
think, oh, that's why mortgage rates went up. Well, no, not actually. You know, the Fed is raising rates on more short-term instruments, you know, things that are, it's the federal borrowing rate that banks pay to borrow money on a short-term basis. And that gets passed on immediately to anything that's, you know, adjustable, like home equity lines, credit cards, things like that.
Sure.
Mortgage rates are tied more to the economy as a whole. And they are super impacted by inflation. And that's really been the big driving factor in driving them up. As the inflation numbers have gone up, mortgage rates have followed. You know, a year ago, the Fed really stopped their buying program of buying mortgage bonds. That was also holding rates down. So you got the Fed tapering of the mortgage bond purchases, and you've got the just the inflation numbers going up, and that has really provided that upward push in mortgage rates. So as the Fed's rate hikes impact the economy, that, you know, their hope is that they're going to pull those inflation numbers down. So as it has that effect, we should see mortgage rates come down. So I've seen predictions that, you know, as early as by the end of the first quarter, we should have a good decrease. Maybe the rates will be down in the 5s. You know, right now they've actually come down a little bit. They're in the low to mid 6s. They were over 7% back, you know, in late October.
Yep.
So they have eased a little bit. So yeah, I mean, are we going to see rates back down where they were a year ago, down in the 2s and 3s? Nobody's expecting that. But we are hoping in the next year to see rates back down in the 5s, maybe even the high 4s. It's really hard to predict, but
yeah, because you just don't know what world event's going to happen. It could just
Right.
change this whole conversation, unfortunately. So,
right,
cool.
exactly.
Steve, what's the best way for people to reach out to you? How can they learn more?
Love to have them, you know, give me a call, or they can go to my website, www.homeloansnh.com. That'll take them right to my Movement Mortgage website. They can also call me at, can I give you my cell number?
Yes, please. Yeah.
My cell is 603-320-2646. And yeah, they can give me a call anytime. I'm happy to answer any questions, even if they're not ready to, you know, to apply for a pre-approval. You know, if they're just kind of kicking tires and just have some general questions about the market, I'm absolutely happy to talk to them.
Awesome, Steve. I appreciate you taking a couple minutes to come on the show. And as always, thanks for being my friend.
All right. Likewise. Thanks, Kevin.